Hey traders, in this video we talk about a good friend of mine's trade in Alibaba. What he's looking at is to play the IPO of Ant, which is another one of Jack Ma's companies that is going public very soon that Alibaba has a 33% stake in. So he talks about his thesis a good bit there. We look at some simple technical analysis that can help improve his entry and his profitability. We talk about the difference between taking shares versus options and which one can be better if you're trying to do more of an investment approach as opposed to trading. And then finally, we look at ways to look at profit targets when you're taking options based on your reward to risk. So a little bit long, but it's detailed, and hopefully it helps some people with their trading. Enjoy. Well, let's look at your Baba trade. Let's start from the beginning. What day did you take it?
Let me see. I originally bought two, and then, I know you don't like it, but I averaged down.
I do not like that, but it's okay because you're learning, and I think you learned something from that, didn't you?
Actually, it wasn't bad.
Oh, so you get rewarded for doing something naughty.
Yeah. Okay, so my first call, one contract at 1380 was August 27th.
All right, let me bring that up. I'm going to punch that in. August 27th. That actually, yeah, has a significance to me. Okay, so this is the first call. All right, and then what was the stats on that we bought?
The what?
What was it like? What strike and everything?
Oh,
Expiration.
okay, so it was a November 20th expiration. 320 strike.
Okay.
Second contract was same strike price, November
So
20th.
another 320.
Yes, sir.
Okay.
And that was at 965.
965. What do you mean? What date?
Oh, that was on September 8th.
September the 8th. Oh yeah, when it went down there. Okay. All right. So we had the 27, 827, and yeah, we both bought the same one. Now, what price did you pay for the first one, and what price did you pay for the second one?
1380, and then
Big money.
965 for my second one.
Okay. All right. So, safe to say now, looking back in hindsight, your first one was a little bit of a chaser, wasn't it? Because, basically Alibaba had been doing and it was up like 57% or more since like the COVID, right? And you were actually getting this after earnings, weren't you?
Uh,
Yeah, because earnings was on 820. So I'm happy that you did not buy it going into earnings because then you would have definitely lost money, almost assuredly. So they had a nice little run up after earnings that you were jumping into, right?
yeah.
Okay. So we got that first one there, and then this was a little bit cheaper. But you see the value, though, in waiting for some kind of a pullback instead of chasing?
Yeah.
Okay, let's look at this from just a simple technical perspective. All right. So you see where, in the month up leading up to the earnings, if you look at this is just the daily chart that we're looking at. Okay. Nothing fancy. We're not going down to the 1 minute. We're just looking at the daily chart, which you can pull up on. This is Thinkorswim that I'm using, but you can pull this up on TradingView. You can pull this up on probably Yahoo Finance. Just anything to just kind of do some cursory look at price action. And the thing that should really stick out to you is, these highs right here, in addition to these lows, but you see how it kind of had established like a pre-earnings range?
Yeah, I see that.
Okay. So, a lot of people like to draw like diagonals and wedges and all that kind of stuff, and I don't like wedgies. I mean, I never got one in school. Wasn't that big of a nerd, but I like just nice simple squares or horizontal lines, as it were, right? So you can establish this as like a pre-earnings range because that's basically what's happening. And so if we draw a line at the top of that range right here and at the bottom, we can establish that, okay, that's going to be a potential technical range that this is going to perhaps in the future respect. You with me that so far?
Yep.
Okay. And on your thing that you took up here, you were chasing a little bit. So let's just forgive that. And let's look and see when you got it this second time how much better of an entry it was. And it wasn't just because you were guessing. You happened to catch it where?
At the bottom.
Well, at the bottom, but what did that match up with?
It matched up with the highs from the previous month's range.
Exactly. And notice how not only once, but twice, three times, four, five, this respected that level multiple times. Do you see how powerful just looking at like past highs and lows can be?
Yep.
Yeah. So that's one way that you can just immediately make your options trading better with just some simple technical analysis. I'm not even bringing in moving averages or any of that other complicated stuff, right? Just looking at highs and lows. And you still had your underlying plan. Like what was your story for Alibaba, why you wanted to? It wasn't some IPO. Tell me about it.
So Alibaba has a 33% stake um, in Ant. It's one of Jack Ma's companies, and they initially had a target of raising $30 billion in their IPO, which was slated to launch in, well, they were talking about mid-October. And so I took the November 20th strike price, thinking that, yeah, that'd be a good enough time for it to reflect on Alibaba's price, because
Well, first of all, let me say I like that. I think that's good. Some people may have made the mistake of getting an October one, but not had enough time. So I like it that you're giving yourself at least an extra month. Okay, go on.
uh, the influx of, say, if for example, if Alibaba owns 30% of Ant, and Ant raises $30 billion, right? That's 30% of that is $10 billion. An
Mm-hmm.
immediate influx of $10 billion to your company's worth is no, like, it's not a simple amount. That's an
Mm-hmm.
astronomical amount to just pull out of thin air and be like, oh, my company's worth $10 billion worth, or $10 billion more. So
Right.
that's a reason why I'm so interested in Baba.
Are you still interested in it?
Yes, sir.
Excellent. Well, so have you been keeping up with this? Like, how is your thesis playing out? Like, are the things that you thought were going to happen happening, or is it still too early to tell?
Well, I've taken a 10% gain on my November 20th, and now um, I I reinvested. I'm going for January 15th, because
Oh, are you in shares or options?
option.
Okay, so you took the profit of this one and you kind of rolled it by getting another one further out.
Yep.
I like this. I'm cool with that. That's good. I like it. I like it. I really like you taking some profit off and extending it out because what that's doing is that's bringing down, your risk, hopefully. Although, well, we'll get into that later. We'll get into that later. We'll talk about your next option. But let's look at this one. Okay. So this has been a good learning process for you, I think, because, with just this, you can learn a little bit of patience. And, you know, I think you can forgive yourself for, taking a second one but this one just happened to be validated by a little bit of technical analysis and also a little bit of patience. So there's a lot of value in patience when it comes to investing, and I'm sure anyone you talk to would say that. But this is just a keen example of it, right?
Yeah, I didn't, to be honest, I didn't put any technical analysis into the uh, like you've drawn. I
Mm-hmm.
The 980 seemed to be a good price to jump in at, and actually, I got an extra one at like 465. So
Wait, so you had a third one?
I ended up with four, and I can't remember. I can't seem to find the other. I had four shares.
Were they were they all the same strike price?
Yep.
What did you end up selling the strike price for? When did you sell out?
I can find that.
Yeah, tell me that.
Uh, October 6th, and four contracts at 10:05.
Okay. So let me mark that up. Four contracts times 10.05. So you did kind of dollar cost average out.
Yeah. I think I got my average down to like 9.05 or $9 or something.
Mm. Well, you know, and I'm going to tell you, I'm going to be honest with you. I'm I'm not going to fault you for what you're trying to do here because I mean, hey, this might be a strategy that kind of works for you if you have like a total cash outlay of 40 grand that you're going to put into it. But you got to understand when you're playing around with options, everything that you put into the value of that option is on the table. And if it doesn't go your way, you lose all of it. So it's kind of like if you wanted to play the shares, at the end of the day, at least you'd have the shares left over, right?
Yeah.
But you know, by doing this, you know, if it had tanked, let's say down to the 241 level, you'd be in a world of hurt.
Yeah, and I do understand that. I've tried to catch a falling dagger before, and that was not fun. Uh,
Well, options is just not the place to try to do that. Shares would be pretty forgiving, but it's just you have a time component. If they don't get to where you need them to be in a certain amount of time, it all goes away.
yeah. Yep.
Yeah. So you probably ended up making what was your average cost on this?
It was about uh, 9 times 4, 3,600. So
And then maybe you made what about
400.
400 bucks?
Yeah.
So you risked 3,600 because you got to take that whole value to make 400. Does that sound good?
Yeah, I mean it's definitely
It's, it's not good when I put it that way, huh?
no, no.
Well, I mean, that's just it played out in a way that was fortunate for you that you got some out of it. But this was kind of dangerous. I worry about you, man.
Yeah, I know. Yeah.
Yeah, I mean, if you want to do this, I just think that you're better off with the shares if you're coming into it with that mindset. You know, you got to think about options are a vehicle to express a trade idea. And I'm cool with your trade idea. You know, like here we can optimize it a little bit by, taking your fundamental thesis and then bringing some technical analysis. And you can already see how, if you just would have waited for, one of these moments, you would have been in a lot better shape. Let me actually do the math if we had done it, just optimally. This is if we did have the crystal ball. What would happen if, let's say, you had got it on 9/8 right here, and you'd put $3,600 worth of shares into it, right? Because that was your same risk for your options. So basically 3,600, and let's divide that by 267.99 because that's like the perfect time to buy it. Okay, so we could have done 13 shares. All right, and then if you had gone from, let's see, from here up to the point that you sold it, that's going to be 24.82 times 13 shares, let's say $322. So basically, you took 400 off the options, but had we done this a little more optimally, yeah, you would have basically done the same thing in just owning the shares, and at the end of the day, you would have had the shares, which means that you could have potentially, you don't know what's going to happen. This thing could continue rising, as you said, up into October and such. Or, the other thing about having the shares is, say it does get to your target, you can sell half of them, lock in that profit, and then leave the rest to go in case you think that, Alibaba is just going to keep on going crazy over the next couple of years. You see what I mean?
Yeah.
So if you're making an investment, that's where you want to really do the shares. Options are, a lot of originally options are supposed to be able to hedge existing positions people have, but most people are using them as vehicles for one thing only, and that's leverage. Being able to control the movement of 100 shares of Alibaba, which, would cost you 29, 30 grand, or you play an option, and for a brief amount of time, you get to control the movement of those 100 shares. But that's the thing, the time component gets you. So, I like it sounds like you really believe in this. And if that's the case, then you just need to be an investor.
Yeah.
So,
It's definitely, it's, maybe I should look at, like you said, I should look at uh, actually buying the stock as opposed to doing the option thing.
I think it make you a lot more comfortable with things like, trying to pick good entries, because I really want everyone to use a little bit of technical analysis, because gone are the days, and they may come back, of, value investing. I'm sorry, but, right now, these companies and the economy, no one out there thinks that valuations are what they should be, right? For earnings, like price to earnings ratios. Uh, People are making guesses about their, unless you're going to get an accounting degree and look at a company's balance sheet and then still make some guesses, you're not really being a value investor. You're taking a dart and you're throwing it at something you think is going to work. But if you look at technical analysis, if you study it, you don't even have to be that good at it. If you just study it a little bit, it can help you to optimize your entries on a plan that you already have based on your thesis. Does that make sense?
Yeah.
I mean, it's really, really nice when you look back and everything's super clear. But the thing is, this happens a lot. It happens a lot, where you can just look at highs and lows and kind of get a little bit of a, you know, little bit of a sentiment of like, where is a good place for an entry, where's a good place for an exit, etc. Like right now, when we get up to this point right here, I'm just clean things up. We're once again at basically this high right here again. Why didn't it break above it today? I don't know. It could do it tomorrow, or it could hold it. You never know. But, so far, this thing is showing a certain degree of structure if you just draw a line and you see how everything kind of matches up. It's not. Some people like really deride it as, like about the equivalent of astrology, but it works enough to be significant, I think.
Yeah,
I make money on it.
you can keep producing results based on a system, and that's I I exited my my position on the November 20 calls, and I re-entered for the same price just out in January. Give
Mm-hmm.
myself a little more time, give myself a little profit, um, and granted, four I don't have four shares. I've got two, but
2 shares or two
two
options?
options. Sorry.
Okay.
I've got two options now instead of four, but I got 2 more months to do it, and who knows, right?
Yeah, you never know what can
Uh,
happen. I hope it works out well for you.
yeah,
I mean,
I've got the it. I mean, it's holding steady at uh 296, and it held at 285 and 276. Like those are, I look at them as ledges, you know.
uh-huh.
So this is the shelf. Okay, well, when does it fall off, and does it what uh when does it go up?
Yeah. I mean, you really, really need it to. I mean, basically, what it's doing, let's call it 300. If you look, the The high of this bar back at the beginning of September was 299 exactly. The high of this bar is 299.51. Hopefully, in the next couple of days, you get a nice solid break of that level, and that is going to be a break of the resistance. And if we just had to kind of guess, how far is this thing going to go? Well, the last time it made a move out of a support and a resistance, it came up to basically, let's just say, potentially 332, and that would put your option in the money, and that would be good for you. So let's hope for that.
Yeah, that's what I'm hoping for. But I've got a couple more months, so if it goes back down to like 287 or something, then I don't have to worry as much as I would if I had my November 20.
Oh, definitely not. You bought yourself time, but you still got to be diligent with it. You can't be complacent.
Right.
You need to. I mean, really and truly, if I was going to trade this myself, I would make sure that I had an alert below this last little swing, like the shelf you're talking about. I like your terminology there. Calling it like little levels of support and resistance, because this was the last point right here at, let's say, 285 or 286 as you said. Then it went bloop, and then it came up to test this right here. It might do something like come back down here and then maybe come back to test it again. That would be okay. But if you start coming down into like a realm right here, I would start to get a little concerned. So that would be my plan for you there.
Yeah, I don't plan on keeping it into. I mean, I would even go as far as 275 if you look at
Well,
that.
the problem. Let's just look at something real quick, because in Thinkorswim, which I use, we can actually look and see what that's going to be. So let's do that. That's going to be a good exercise. 1 second. Let me bring up my handy dandy risk graph in here. So, Baba. All right. So what option do we have again? What's the January option?
Strike 320 January 15th at uh, 1765.
Okay. So we bought this for 1765.
Yep,
And how many do we have?
two contract.
Two of them. Okay. Both of them at 1765.
Yep,
Okay. So we're down a little negative on them, aren't we?
yep.
Okay. So the current price Baba is at right now is, what are we at? What's Baba at? Baba is at 296, 296.50. Okay, we'll just put that in here. 296.50. That's our midpoint that we're going to evaluate. Now we want this thing to get up to 330. Okay, that's what we really want to get to. But like you said, 275 was that danger zone that you're thinking about. So let me. My danger zone was 284 for you. But let's just take a look at the difference here. I'm going to add an extra slice here for 275. Okay. So what I can do here is I can kind of hypothetically use this to tell me what the prices might be. Like, let's just say a week from now, Wednesday the 14th. Okay. If we get this up to 330, next week, that'd be fantastic. You're going to make 2,900 bucks. Okay. If we just hold where we are, we're still going to be down about 400 bucks. If we come down to the danger zones, your danger zone, you're going to be down 1,800 bucks. So basically half your position, because you're taking 1765 times 2, right?
Yep, following.
So 1765 times 2. Your total risk in this trade is 3,500 bucks. Now, notice how if we get up to 330, where we looked at is a good potential target, we're going to make 2,900 bucks. So we didn't quite get a 1-to-1 even on our risk to reward, did we?
No.
Yeah. you really need to get a lot more to make it worth it. Because, if you buy options, I'll tell you right now, it's a hard truth, you're going to lose more than you're going to win. It's just what happens when you're buying options, especially if you're going like out of the money. The probability is not in your favor. Now, if you use some technical analysis, you can get that up a little bit, but you just have to assume that you're going to lose more than you win. And your winners need to be bigger than your losers, right?
Yep.
Okay, so that's just something that you need to try to do. So, 330 is probably what's sustainable, but really, where do we make something where I'm going to get what I want you to get, where I want you to get at least like a 2 to 1? So really, what we need is 3,500 times 2. We need 7 grand as a profit. So 350 is not going to get us there. 360, and let's give it some more time. Let's say that we go out to December. That gives us about a month before the option expires. Because you got it in January. So let's go out there and evaluate things. Well, 360 only gets us about 5 grand. Over the course of 370. Now we're getting a low close. So we really need Alibaba to get you a good return on this to make it worth your risk. I would say you need this thing to get up to 370. But notice if we go out to December and we get down to your danger zone, you've pretty much exhausted your entire position, right? What about November? Let's just say a month from now, because today's the 7th. Let's look at November 7th or November 11th, a month from now. So if we're at 265, or excuse me, 275 a month from now, out of $3,600 of risk, you've exhausted about 2,400 of it. You're down a lot. Do you see how like time is becoming a very important factor as well as price movement?
Yeah.
Yeah. I mean, in fact, if we got up to the 330, or excuse me, if we stayed right here, if it did nothing from now until November, we're still down $1,100. So we've got to really get a big move. We've really got to get like 360, 370. So, we got to get 360, 370. Just call it 360. So, from where we are right now, we need about a 20% movement on this stock to get you a good return that I would be happy with you getting. I'm not trying to scare you. I'm just telling you, that's what the theoretical numbers tell me, right?
Yeah. Yeah. I see that.
So, I mean, of course, in the realm of it going up, you can take some profit, but I just want you to have good habits if you're doing this kind of stuff, because one of these days you're not going to be so lucky, and this thing could go down, and you're going to lose your entire outlay of your options. And I don't want to see you do that. You're a good friend. You've been a good friend for a very long time. I don't want to see you lose all $3,600. But one of these days, if you keep doing options, you're going to pretty much lose the full value of the option. It's going to happen one day, if you keep doing this. If you just like end it right now and say, okay, that's it, I'm good. But most people don't do that. Don't do that. They want to play the market again.
Right. Yeah.
So,
I understand the risk, and I didn't really understand all the technical stuff that you went through, like with
mm-hmm,
the thinkorswim and the monthly uh, uh, thing that you just did.
the risk graph.
Yeah.
Yeah, yeah. Well, that's an analytical tool. It's a little more advanced, but I just want to kind of just throw some numbers out at you for just real quick where you can be thinking in your head, okay, what price of Alibaba should I be shooting for to get a good return? And so where I think technically you should be aiming for is 330, but from a reward to risk standpoint, you should be really looking for like 360. So that's kind of aggressive, but if we don't get to one of those values, we really start to not make very much money on this. And that's just the world of options.
Right. So I've got a question.
Sure.
Okay. So we look at where it breaks out into its new highs, and how I wonder if there's going to be a correlation between um, the time it takes. You see. I wish I could draw it, but you see these points where it reaches new highs and it tests resistance and it's got it. Yeah. So I wonder what causes it to test those resistances and what when it comes back down, like what the pullback is. Wonder what those factors are.
I wonder what it is too. If you ever figure it out, tell me,
Yeah,
teach me.
yeah. But it,
No, I mean you don't. That's again because you don't know.
but it,
You don't know. You never will.
it
You here's the thing: thousands and thousands of people trade this stock. You can't go around to every single one of them and ask them why did you sell then and that much. You're never going to be able to take a scientific poll, and even then, by the time you do that, it's going to be months down the line, and it doesn't matter. So the why is not quite as important. But if you study the patterns that price makes, like using the highs and the lows, like I showed you, more times than not, you could be able to predict these things.
right. Look at the previous, so I call it shelf, right? Look at the
Like
high.
this one,
Uh,
this major inflection point right here.
yep, yep. So that's what I'm seeing right at the current range.
Uh huh.
Um, so I mean, and it could tank. I don't know, but I'm
Well, I mean, as long as it
seeing
stays in this range, I mean, as long as it stays in this range, I mean, it's basically telling you, here's my range. You know, this is what this is telling you. It's telling you, hey, I might, if I hold here, I might bounce between 300 and 270 for the rest of the year. You don't know, but it's kind of revealing to you where these levels are.
right.
So just keep an eye on them. But what I really want this to happen for you and your sake is I want it to break it tomorrow above 300 and never look back. We'll see. That's the best case for you, if for it to break out now. You don't want it to break out later because then the time decay of the option is eaten against you.
Yeah, I would like for it to do that as well.
Yeah. So,
Thanks for
well,
taking the time to
yeah, you're welcome, man. I got to wrap up too, but any final questions or anything?
mm, if you ever find that crystal ball, just let me know.
I'm looking, man. I've got something that's working for me 45% of the time,
Well,
and I think that's good.
that is really good, you know.
Yeah.
But
I'm wrong more than I'm right, but I make more than I lose each time.
well, maybe sometime we can go on an archaeological dig and try and find that crystal ball.
Aha. All right, man.
All right. Thanks a lot.
No problem, man. Have a good evening.
You
Bye
too.
bye.
Bye.